All right, good evening. Thank you everybody for coming again for our this year second DLC meetup. So the last time we had, we had this whole place packed up. Today we still have a lot of people. So first of all, I just want to thank you for everyone for coming. I see a lot of old faces, okay, friends and new faces. So maybe, all right, I just ask for a show of hands, not to embarrass you, but just to know that you are first time with us, and we'd like to welcome you. Anybody first time here? Thank you, thank you, thank you, thank you. Wow, I think we have quite a lot of new people today. And I also see some people bringing their family. One gentleman bringing her daughter all the way from Japan. Where are you? Oh, you're here right in front. Yeah, so yeah, you see the daughter came all the way from Japan here and brought it here to the seminar. All right, thank you for coming, and I hope you will benefit from this session. All right, so like always, we have much in store for you. So this is a DLC session, a meetup. And if you are first time to DLC, you will get to know a lot more about DLC, how we use DLC for trading. And today we talk only about DLC stocks, all right? And DLC stocks, you know, DLC stocks and indices, right? We all know that they are already quite a lot of them. All right, so we are not short of stocks and asset class to trade. So it's enough. It's enough. All right. So the idea of this is really to give you an instrument, right, to help you make money. All right, and we all know that DLC is a leverage instrument. And therefore, if you know how to use it, it works for you and you can make a lot of money. If you don't know how to use it, then you can lose a lot of money. All right, so it's a two-edged sword. So that is the idea of this kind of session. It's like sort of a session where not only we educate you on DLC, we tell you trading opportunity, but we sort of mentor you, right, and handhold you how to trade DLC so that accident don't happen, all right? So we want as many people to make money as possible. We want to introduce you good products. And for me, I've been trading for 30 years in the Singapore market. And I believe, and that's why I'm with DLC, with Marcus, partnering him. I believe that DLC is one of the best, all right, one of the best derivatives to trade here, if you know how to use it. Okay, so today we will talk about DLC, we talk about stocks, we talk about the stock market, we talk about, I'll give you, as usual, my macro views, all right, and we go all the way to technicals. And as usual, I will present to you my views, my insights about the market, my insights about the macro datas. Okay, so and with that insights, I hope you take it back and you decide on your own where the market is headed. All right, so I'll give you my opinion and all that, but I will also load you with datas, macros, technicals, all right, all this, or the datas that, information and datas that you will require to make informed decision when it comes to trading, okay? So lots of stuff coming up, all right? Stay tuned. And let me just first invite Marcus up here to tell you a lot more about the mechanics of DLC.
Okay. Hi, everyone. Hello. I think maybe some of you have seen me in the last session. All right, so the last session, I think we went up to like 10 p.m. and then we were chased out by SGX. So I'll try to keep it short on my part. I know we are all looking forward to Robin's load of data and storytelling, which I really love. So I'll try and keep it short. In the next 15-20 minutes, I will try and give you guys an introduction to DLCs, what is it about, how can you trade it for those who are new, but also to share some insights about what have been people trading on the DLCs, what's exciting. I think the last few days, everyone should have been quite excited. Hong Kong market shown quite crazy. I think that has been probably the most bullish on the Hong Kong market I've seen all year. So it's definitely a nice time now that we're having this meeting with Robin to discuss more about the DLCs as well as the Hong Kong stocks, which is a large part of the DLCs. And then hopefully we can get some trading ideas as well as some direction on where the Hong Kong market is going. The key question in my mind, the last round was whether the US market will rebound or not. This time around, the question in my head is the bullishness in Hong Kong going to be sustained or not? So hopefully, we can get some insights from Robin later. So I'm Marcus from Société Générale. We are the issuer of this daily leverage certificates instrument that we have on SGX for the last 6 years. We just turned 6 this year. So we've been around for 6 years issuing DLCs, and I'm glad we've been very encouraged by the adoption of these DLCs. And for us, you might be asking, like, what has SocGen got to do with Robin? Well, Robin was very supportive of the DLC since day one, 2017. He saw it as a way, he was aligned with SocGen that we saw that this is actually what will bring SGX out of its, the bottom of the barrel. I mean, everyone says, you can't get Apple or the Tesla, SGX will never get the kind of big listings, which to a certain extent is true. That's why for Robin and I, we believe that products is a way to go for people who are still involved in the SGX market, because these products allow you to gain not only Singapore exposure with a bit of leverage to make it a bit more exciting, like your DBS only moves 0.5% a day, with your 5 times kicker, it could be a bit more exciting, but also the fact that DLCs can offer you exposure to foreign underlyings, all right, Hong Kong stocks, US indices. So that's probably one of the, a shelf of SGX that can help it to break out of its, constraints, All right, so we are aligned, and Robin and SocGen, we have been working in partnership for the last 6 years. So we're very happy to be able to hold this and this interest group. And also a big thank you to SGX. I think Jia Yuan from SGX, she is a product manager there. She gave us this venue space for us together. So we're very appreciative of SGX's support as well. Okay, let me just start quickly. All right. Oh, sorry. So DLCs, I think it stands for daily leverage certificates. So number one misconception is DLCs, does it mean that I can only trade it for 1 day or intraday? All right, the daily does not refer to how long you can trade it. The daily refers to the leverage. Every day you get that 3 times, 5 times, or 7 times leverage. But this is a short-term trading instrument, just to emphasize again, okay? This is not a buy and hold product. This is more of a tactical instrument that you can use as part of your portfolio to get potentially enhanced returns. All right, so leverage is a double-edged sword, so you have to exercise caution. Can give you enhanced return, but also your downside is also at risk. All right, can be multiplied. All right, so it can be held for a few days, or a few weeks, or maybe 1 or 2 months. But definitely, we do not recommend that you hold this product for months at end, or half a year, or 1 year. All right, so this is a short-term trading instrument meant for intraday trading, swing trading for a few weeks, or 1 or 2 months, but definitely not for long-term. Okay. All right, so just a very quick insight. So I think I was looking at who are the gainers and the losers for like the first half of this year, and I did a check today as well. They are largely still the same, even though all the bottom people like Alibaba all have gained quite a bit in the last week. But your top 5 still remains as PetroChina, BYD, NetEase, HSBC, and China Mobile. All right, so these underlying stocks on the Hong Kong market are actually the top gainers in the first half of 2023. The top losers, China Merchant Bank, Meituan, Wuxi Bio, JD, Li Ning. So China Merchant has got out of the bottom 5, but Sunny Optical entered the bottom 5. I think some of you who follow Sunny Optical will have seen quite a big drop earlier this week or last week. But today, it managed to get back 88% or 10% gain today on a rebound. But it still is entering the bottom 5 of the Hang Seng Index constituents. All right? So I wanted to showcase some of like DLC examples. Okay, so for this PetroChina DLC, being that PetroChina is the top gainer for the first half of this year, PetroChina actually gained 51% from 30th December last year all the way to 7 July 2023. That's a 50% gain. All right, so the 5 times long PetroChina DLC, DIKW, gained 400% in that period of time. All right, so if you manage to capture a nice trending market like this, yes, you can hold it, and then you can ride on the compounded gains All right, so even though it's a 5 times leverage instrument only, but 50% times 5 is 250%, but it gives you 400%. So that's a positive compounding. So that's one of the best thing, but also, you have to watch out for it as well, the compounding effect of the DLCs, where you can get more than that 5 times performance, and over time you can compound that gain to quite a sizable amount over there. All right, so this DLC, PetroChina DIKW, was one of the best performers in the first half of this year, owing to the 50% gain on PetroChina. All right. Okay, and the top loser, Li-Ning, minus 42%. So another feature of the DLC is also that you can trade both sides of the direction of the market. You can trade the long side, you can trade the short side. Okay, you can trade both bull and bear markets. So in this kind of markets where it can be quite volatile, it pays to have a tactical instrument where you can trade both sides of the market, long and short directions. All right. So Robin does make some calls as well when he's bearish on certain stocks or certain indices. That's where the short instrument comes in. All right. So this is quite essential. You need an instrument to be able to short. You shouldn't really go and short sell on the stock. And for indices, you definitely need an instrument. So DLC is one of the instruments that you can use to go short on the market. All right. But shorting is, of course, not as easy as buying a stock and hold. All right. Or even taking the long DLC. Shorting a stock or shorting an index takes a bit of skill, a mindset change when you're going short on a direction, when you're playing both sides of the market. So I wouldn't say it's for everyone, but for the more sophisticated ones, if you know how to short, then this instrument is definitely something that you can use as well to short the market. All right. So for this case, even though Li-Ning was the top loser in the Hang Seng Index, it lost minus 34% in the first half of this year. But if you have bought the short 5 times Li-Ning DLC, DFZW, you will have gained 170%. This is a holding period of about April, May, June, so it's about 3 months. All right, you have gained 170%. Okay, slightly more than the 50%, the 5 times leverage. 34 times 5, about 170, so it's slightly a bit more only, but it's around there. Okay, so 5 times leverage on that. So you can go short on the market with the DLCs. So number one, you have leverage, but also you can use the short DLCs to go short on the market or certain stocks that you think that are bearish or will correct. All right, so these are giving you examples of how the DLCs have gained quite well. But of course, on the other side of the story, losses are also magnified on the downside. Okay, so 5 times leverage, you get 5 times if it goes in a direction. But if you bought the long DLC or you bought the long DLC and the underlying goes down instead, then your long DLC will also lose 5 times. Okay, but then it's on a close-to-close basis. So you see that there's 100%, 170% here. Previously, the PetroChina gained 300%, 400%. But your DLC, okay, you cannot lose 400%. Okay, that will be more than your invested capital. All right, so this is not a margin product, the DLCs. This is a securitized product that is traded on SGX securities market. So you put in $2,000, you buy the DFZW, you will not lose 170%. Okay, the max you can lose is 100%. Okay, so you'll not lose more than you invested for DLCs. It's not a margin product. So in a sense, even if the underlying moves adversely against you, you will not lose more than your invested amount. Okay, if you trade CFDs or you trade margin kind of products, options or futures, you could potentially lose more than you invested if the underlying suddenly gaps down like crazy because you'll get a margin call. Okay, so this one, no margin call, no margins. Your max loss is whatever that you put in. Okay. So on the Singapore side, the top gainers and losers all stay the same. I just checked today, since 7 July. So Sembcorp, Keppel Corp still quite top performers. I think this year is the first time I see Singapore stocks actually be quite volatile, like your Sembcorp, Keppel Corp, SIA, or some days I could see like 4-5% gains in a day, or even downside. So Singapore stocks, a few of them are actually quite volatile. I mean, your bank stocks are still okay, but then some of these Sembcorp, Keppel Corp, SIA actually were quite volatile this year for those who have been paying more attention to the Singapore market. Okay, for the top losers, CapitaLand, Wilmar Venture, ThaiBev, CD Development are also still in the top losers for the first half of this, year to date. Okay, similarly, if you have bought the 5 times long Sembcorp, I think we did see some holding outstanding positions on this DFKW. 57% gain on Sembcorp. DFK returned almost 500% in the first half of this year if you head on to the Sembcorp long DLC. Okay, this is a 6-month holding period. I again emphasize that DLCs are not a long-term holding product. You shouldn't be holding it for 6 months. This is for illustration purposes only. But if you manage to capture a nice trending market and you really have the balls to really hang on all the way, 6 months, these are the kind of returns that you can possibly generate. Okay? Of course, if you have bought the 5 times short, I think your DLC might have been worth very close to 0 by now already. Okay? All right, CD development, again, the top loser is CD development, minus 17%. For this DLC, DWFW, the CD dev short DLC, all right, it gained 92% on the back of CD dev dropping minus 17% during this period. Okay? Okay, I wanted to show you guys also some of the fund flows and what have been people been trading on the DLCs. All right, so we have over 300 DLCs that are listed on SGX securities market, over like 60 plus underlyings. A lot of Singapore stocks, STI constituents, we have them. Hang Seng Index constituents, we also have them. And yes, last year we introduced the US indices. So this is some of the fund flow. Fund flow means that people who buy the DLCs. So on the long side, mostly on the long, okay? So I think for those of you, I don't know why, but like I said, shorting is not for everyone. It takes a bit more skill to do short. So 80%, 70% of our turnover and funds flows are actually on the long DLCs. All right? Stock price drop, people buy the long DLCs. Stock price go up, people still buy the long DLCs. I don't know why, but that's what people like. So the short DLCs, I would say, is more for those really more astute investors or more sophisticated traders. Then they trade the short DLCs. But otherwise, 80%, 70% are all on the long DLCs. Okay, but please, one thing, do not go and short sell anything. Okay, do not go and short sell the long DLC so you can get a short position. Do not short sell the short DLC so you can get a long position. Short selling on the DLCs, please be careful, because in the end, issuers, we are the issuer and a designated market maker. We market make on the DLCs. You have no inventory. No one else has the inventory. So we have to come in to rescue in the buy-in market if you happen to short sell and you didn't cover within a day. So careful when you sell, and careful when you do not short sell the DLCs. Okay. So fund flows wise, I think quite evenly spread out for Singapore stocks. UOB, Keppel, DBS, Venture have been top fund flows for this month so far. All right, so these are some of the ones that are more interesting. I think UOB, everyone was maybe playing up to the earnings report, and I think they should be rewarded. UOB probably had quite a good gain. I think today it was up 3-4%, and I'm quite amazed by it. So those who are holding on to the long DLCs on UOB should have made some money. All right, top fund flows for Hong Kong stocks. All right, actually Alibaba is the biggest one, because from what I know, there are a few big traders in there on Alibaba. All right, they buy huge sizes like 500,000, 1 million. But you remember, you buy 500,000, the notional is 5 times leverage. So you buy 100,000, your notional is 500,000. You are having 500,000 exposure to Hong Kong stocks. All right, so there's some big guys in this. That's why it's a bit more skewed on Alibaba. There's a huge difference between that and the rest because of a few big traders. But otherwise, you can see on the diagram in the shaded in brown, Tencent is the second. Okay, and then Meituan, Kuaishou, and Sunny Optical. Okay, when Sunny Optical tanked like 10% or 15% or 12% that day, oh no, 15% it hit, yeah. We saw people coming in after that. All right, so everyone don't know how to trade short DLC, only know how to trade a long DLC only. All right, so long DLC, Sunny Optical, I think if he held on to it today, I think he should have made some money lah. All right, today Sunny Optical rallied 10%, so it's quite nice. Okay, so Tencent, Meituan, Kuaishou, Sunny Optical, and Baidu because of the whole maybe the AI thing lah, AI kind of team. All right, so we have a lot of Hong Kong stocks. This is just a subset. These are just the top 10, but we have over like 30, 40 Hong Kong stocks that's available, including like your Ping An, your China Merchant Bank, the more old economy stocks. We also have them. And all our single stock DLCs are 5 times leverage for both long and short direction. Okay? All right, and then the indices, Hang Seng Tech Index is, I'm quite surprised, but Hang Seng Tech Index has been the top traded, top fund flows in the last 6 months, 7 months. Ever since China reopened its economy last year in November, people have been piling into the Hang Seng Tech DLCs. All right, our 5 times DLCs, Hang Seng Tech DLCs, and recently, early this year, we launched the 7 times Hang Seng Tech DLCs. Again, Hang Seng Tech is not your Hang Seng Index or your STI, it's another animal. It moves quite crazy swings. All right, so 5 times or 7 times, please be careful. All right, it's quite a lot of leverage for an index that actually moves quite quite well. All right, so it's a pure tech index. It can move 5-7% in a day. So watch out for that. It's not like a Hang Seng index. All right, but people have been buying into Hang Seng Tech. After that, it's Hang Seng index, and then it's Simski. All right. Okay, that's fund flows. So that's what people have been buying. All right, people who, in terms of turnover, this is the ranking, the top 10. Okay, so turnover maybe it's a reflection of not only just people who buy, but also people who are more in and out, people who actively trade it more. Then you get more higher turnover. The fund flows is those who probably hold it overnight or hold it for a few days. So that one is probably an indication of people who maybe are willing to hold for a longer period of time. Top traded is probably those who are more active, those who like to trade it intraday. Then I think the top names, UOB, DBS, OCBC, the Singapore banks as expected. Top traded Hong Kong stocks would be Tencent, Meituan, Alibaba as expected. But you find JD inside there as well, and BYD. All right, so JD and BYD are inside there. All right, BYD is a very interesting stock. That's one of the reasons why I always tell people, if you want to trade the BYD stock, right? Okay, not buy and hold. If you're looking for a swing trade or a position trade on BYD stock, you should definitely look at the DLCs. To invest in BYD itself, right, the minimum investment sum in Hong Kong itself is at least 20K Sing, one shot, because of the minimum board lot size. So if you want to buy BYD stock, right, one shot you must at least put up 20K in one transaction. For DLCs, you can trade it for as little as $100 because of the board lot size is only 100 units for Singapore. And the price is around $1 or less than that. But of course, you don't trade $100, else your broker commission, you loogie, So, but you can do it in terms of smaller clip size of like 5,000, 3,000, 2,000 if you want. And then you can scale into your position for BYD rather than having to put in one lump sum 20K into the stock, especially if you're holding it for a short period of time. Right? But if you want to buy and hold BYD for long term, you think EV is like the long-term trend, then so be it, just go and buy the stock if you can put in 20K. But for DLCs, if you're looking at short-term trading, a few days, a few weeks, you definitely can consider the DLC. It's much more efficient, especially when trading in Hong Kong stocks. The minimum investment sum is much lesser than if you were to buy the Hong Kong stock itself. Okay, and you also trade it in Singapore dollars. You don't have to worry about changing your money to Hong Kong dollars and then suffer the wrath of USD dollar because Hong Kong dollar is pegged to the USD dollar, right? Then you have to suffer the exchange rate. So Sing dollars much more convenient and it's traded on Singapore on SGX. Okay, top trader index again, Hang Seng Tech and Hang Seng Index. Okay, I hope there'll be some shifts next time I see you. But so far this has been the trends. Okay. Okay, I don't have much time, but I'll just quickly sum up the DLCs. In what I just showed you guys just now, there are a few things that I mentioned. Okay, number one is that the daily leverage. All right, so all the DLCs we have for single stocks, DLCs are all 5 times leverage. Okay, 5 times leverage for both long and short directions. And this 5 times leverage, bear in mind that it's on a close-to-close basis. For those of you who traded TQQQ or SQQQ in the US, or your SDAO or UDAO, those leverage and inverse ETFs in the US, this is exactly the same kind of payoff. Okay, exactly the same kind of payoff where you get that fixed leverage factor every day. Okay, so for DLCs, you get 2 times, 5 times, or 7 times leverage every day on a close-to-close basis on the underlying stock performance. If DBS or Tencent move by 1% today, this 5 times long DLC will move by 5%. All right, the 5 times long DLC will move up by 5%. All right, while the 5 times short DLC will decline in value by 5%. Every day on a close-to-close basis, all the way from a listing date all the way up till maturity date. Okay, so you'll get that 5 times leverage every day, and that's what the fixed daily leverage means. Okay, all right, and it's linked to an underlying asset. I think you know that. So we have indices, we have single stocks, Singapore, Hong Kong, and I hope really one day that we can do US stocks. I think that'll be quite interesting one day. We're trying. Okay, and we also hope to do commodities one day as well. All right. But we've come a long way from just 10 DLCs on indices to now 300 over DLCs. So I think we are very encouraged that the adoption of the DLCs have been growing. Okay, it's traded on SGX like a stock. All right, so you can buy it through your POEMS account. There's even a dedicated DLC tab in your POEMS account. If you haven't seen it, please go and have a look at it. There's a DLC tab there, and then we do have a dedicated DLC tab on the POEMS account. And then you can see over there also all the list of DLCs that we have. All right. So it's traded on SGX. So you can trade it on POEMS like you trade same way you trade your DBS stock or your UOB stock. You buy and sell like a share. All right. All right. So if it's $1, you just put in your bid and offer at there. Okay. So what we always advise is you should look at our website dlc.socgen.com. All right. To see which DLC, like say you want to choose Alibaba, then you go for the long DLC, then you choose the DLC, you see the counter code there, CXCW for example. Then you go to your POEMS account, you key in CXCW, and then you can transact over there on your POEMS account. Okay? All right, so, and then SocGen, we are the designated market maker. We are the issuer and the DMM, designated market maker. So we are there to provide liquidity throughout the trading day for investors to buy and sell the DLCs. So another myth is that people sometimes they see some of the DLCs, oh, it's not really traded. I mean, we have 300 DLCs. Not everyone wants to trade your China Merchant Bank DLC, for example. Okay, most liquid is always Tencent, Alibaba, Meituan, you saw over there. But no one wants to trade the China Merchant Bank, so there's no turnover on it, for example, for that day. That doesn't mean that it is not liquid or that you can't buy and sell it. Because us, as a designated market maker, we are obliged by the exchange and regulated by the exchange to put up bid and offer quotes with sizable volumes on each side throughout the trading day, as long as the underlying stock is open for trading. Okay, so you look at the bid, you might see zero turnover there, traded value, but you must look at the bid and offer volumes. Over there, you can see, oh, okay, SocGen is putting up their bid and offer prices with the volumes over there for people to buy and sell the DLCs. Okay, so that's another misconception. No turnover doesn't mean there's no liquidity, because there's always liquidity as long as the underlying stock market is open. Okay? All right, so I think quick one, then this is where we've come a long way. Over here, we just introduced the US index DLCs last year. So for those of you who trade the TQQQ or SQQQ, it's 3 times leverage over there in the US. So we hope to give SGX a bit of edge. We have 5 times and 7 times leverage over here. Okay, but you can only trade it during SGX market hours. Okay, that's the catch. All right, so it's a good and bad thing. All right, so for those of you who are not intraday traders, you don't want to manage your position at night, you can consider this. All right, so this is like more for a swing trading or a position trade rather than an intraday trade, because during the Asian hours, it tracks the US E-mini futures. Okay, our quotes will track the E-mini futures during Asian hours. Then overnight, it will track the cash market, cash index overnight. So in the morning, you might see a bit of a gap up or gap down, okay, on these DLCs. But if you're a position trader, you want to hold it for a few weeks or 2 weeks, then this could be very useful for you. And especially if you want 5 times or 7 times leverage, okay? And we also introduced the 7 times Hang Seng Tech DLCs recently. And I think it's been quite hot as well. Okay? Okay, I think that's all for me. I think mostly that's my introduction for the DLCs. Just nice. I think it's next 1 hour, hopefully 1 hour or more, will be for Robin to share about his insights on the market. And please feel free to ask any questions that you have. I think this is, although it's quite a lot of you, but hopefully it's a bit more of a close-knit. Please raise your hand, anything if you have any questions to ask. All right? Thank you.
Okay, so first of all, before I start, right, how many of you are like, glued to the financial news and glued to charts, glued to your stocks, and you are, doing it that very frequently? How many of you? Like always, in tune, never leave the financial information, whether it's your stocks or news, all right, or prices. How many of you? Don't be shy. Okay, 1, 2, thank you for that. Thank you for that. Great. But how many of you is like, you totally once in a while, maybe only once a day, you just look at your stocks and you don't even look at the chat group. So most of you are in the Telegram chat group, right? So some people will tell me that, I can't leave the Telegram chat group. Every minute I must be looking at what is happening in the Telegram chat group. Some of you say, I don't have time, but maybe in the afternoon or maybe in the night when I get home, then I start scrolling what Robin is saying. And sometimes when I get information, it's too late. All right. So how many of you are like, don't like one day only look at the Telegram chat group once? One time. Okay, good. How many of you are like, quite, you know, dependent on the chat group, and I just want to get a few, because we do a lot of work on the chat group, because we also, like, you know, don't want to, you know, see our effort wasted. All right. So how many of you are like quite active on the chat group? You listen. Thanks. Wow, great. So it makes my effort worthwhile. And I'm happy to do it, okay? Yeah. Okay, so like what we always do, we will do a recap on what we did on the 5th of June, all right? So 5th of June was the last time we had this meetup, and I was clearly, in my heart, bearish, but when I look at the chart, it's bullish. So I tell you that, you know, you should follow the chart, don't follow my heart, all right? Okay, so the Dow Jones, right? I think if you have followed the chat group, right, you know a bit of history, okay? The history is that I managed to call the top of the Dow Jones and it crashed. And I managed to call the top of the NASDAQ and it crashed. And it made me quite a lot of money. So, you see, so when you come from a background like that, right, you know, you call the top, it crashed, and you make quite a lot of money out of it, it's very hard to switch. You know what I mean? It's tough to switch because you make your money from the short, so it's tough to switch to become a bull all of a sudden, right? But whatever it is, right, after the 20 years or 30 years of trading, you know, I learned not to follow my emotions. I learned to follow news, macros. I learned how to follow technicals, fundamental and technicals, okay, with very little emotions. Okay, so here, right, the Dow Jones, when I look at this chart, it's quite bullish, and I said, okay, Dow was doing like 33,500, and I said, you know, it's going to still going to be higher, maybe 34,000, and that's what happened. We were here at 33,700. It went to 34 and 34,500, overshot a little bit. Then it came down, right? So it's not like, you know, at that point of time it was like one-way traffic up. So it went, and you could see the swing, right? Can be 1,000 points. All right, can be 1,000 points, and then this is where we are. Now is one-way traffic, all right? So if you have been following the Dow, it was up 14 days in a row. 14 days, all right? Sometimes you just have to believe and follow, all right? It was up 14 days in a row. Okay, so NASDAQ, I was very bullish on NASDAQ, and I was showing you the rebasing chart, and I said, you know, in the rebasing chart, NASDAQ was outperforming every other indices, right, and every other asset class. So NASDAQ was strong, and I said, you know, there's still room to go, 15,000, and so that's where it went. It went 15,000, so it was at 14,556. It went to 15. After 1,500, it went above 1,500, and then you saw that it did a dive. And after the dive, it was like a one-way traffic up there. All right. So Hang Seng also. All right. We were slightly bullish with a downward trend. So Hang Seng was on a downward trend. And I said, all right, Hang Seng is going to go up, but when it go up a little bit more, hitting this trend line, it will come back down to 1,800, and that's what happens. You saw that Hang Seng went up, it went all the way down, okay, to about close to 1,800. And I talked about HS Stack back on the 5th, and I said HS Stack had a golden cross. And therefore, although it was like falling a little bit, but watch for the golden cross, right? If you guys understand about technicals, you have golden cross, you have dead cross, and when you see a golden cross, it doesn't mean that the market is going to go up right after that, right? Sometimes it goes down after the golden cross, but eventually, most times, it comes back up again. That's why they call it golden. All right, so dead cross is the other meaning of it. So after the golden cross, HS Stack, you saw it went up, you know, down and up again. So Alibaba, slightly bullish, but still on the downtrend, and we were right about that. It went up, and then it crashes down, all right, 87, and then went back all the way to 80. So you see how volatile it is, right? All right, it went to 87, and then if you don't sell at 87, if you don't follow my trade plan and sell at 87, it went back to 80. When 80, you should panic, right? Wow, how come all of a sudden, it's like within like 1 week, I lost 10%. So some people will just cut loss, that kind of thing, right? So it's very important to be following a plan, all right? So BYD, okay, so BYD is my perennial favorite, and I'll tell you why. Later, I have some slides, and I'll tell you why we should be, in the Hang Seng market. I've always been very bullish about BYD, and I follow it very closely every day. So that was our BYD call going to 261, and it went to 261. Of course, overshot a little bit. If you don't sell it at 261, where do you go? You go to 246. All right, so that's quite a big fall, right? So that's very important. You study technicals and you know where the level is, okay? All right, so that was our last call. And so the last time, I talked about the SOE, the Chinese SOE that will outperform the market because that's the focus of the Chinese government this year. And they are talking about, ramming up, making the SOE more valuable, or finding the values in SOE, and they obviously think they are undervalued. So I talk about China Mobile, and I said here a little bit, wait for 61.70. All right, it came close, did not hit that, but went to 62, and then it bounces off. But one thing I want you to see about China Mobile is that while the Chinese market was very weak, it was coming down, right? This kind of stocks, right, they hold the value, all right? Although they don't go up a lot, they don't come down a lot. So your investment is sort of protected. So over time, even if it doesn't move, you collect hefty dividend. The dividend is very big only, like 6% all right? So that's something good about China Mobile and PetroChina, all right? So PetroChina also, it did well, all right? So talking about here, when it was here, we're talking about target of 595. So it went to 595, all right? Went to 595, and then it came down all the way to 532, and then it went back up again, all right? So that was the last DLC, all right? What we talked about at the last DLC. Okay, so today we come to the topic proper. So you must have been reading over the news, right? So if you're reading over the news, you hear a lot of people missing out on the current bull market, all right? Why? Basically, the background is last year we had a big crash. Stocks like Metal, Facebook's, all right, went down about 60%, all right? And then, from sort of maybe the last 4 months, 5 months, all right, metal, recovered 70% of the losses, okay? So it was quite a wild swing. I still remember talking to a young man, and I met him, he's about like 35, 36 years old, all right? I remember reading up his profile and how he became a millionaire very early. So he was traveling around the world on his Facebook. He was traveling around the world when he was 35, 36. And then all of a sudden, right, I realized on his Facebook, right, that something happened to him. So he had a lot of followers, so he was quiet, all right? And then there was not a lot of things about him. And then finally somebody told me he has gone bankrupt, all right? And there's a lot of lawsuit because he was like managing, he was making a lot of calls and people were buying his trading ideas and all that. And when people lost money, a lot of people actually sue him, and then he also lost his own money. So I happened to meet up with him, all right, just over last one month, and I asked him, how did it happen? I mean, you are a financial educator, and you taught people how to invest, value investing, and then you lost a fortune. Not only lost a fortune, you went bankrupt, right? So he told me what happened. So he said that he used fundamental analysis to value Facebook, and when Facebook dropped 20%, all right, he felt that is the bottom. Very strongly, that was the bottom, and then he started buying Facebook. He kept averaging down, and he leveraged, all right, to a point where he could not hold the stock anymore. The stock, can you imagine, right? He got stopped out at when he dropped something like 35–40%, and then Facebook went on to lose about maybe 60%, and that was where he lost everything. All right, so that is the reason why I want to tell you about a story like that is because so this guy, I mean, he teaches value investing, got a following of 6,000 people. All right, and he makes a lot of money out of previously out investing and also teaching, and everything was gone. All right, can you imagine a guy that was, everybody looks up to, all of a sudden went bankrupt. Right? So even professionals, right, if you don't follow a set of discipline, if you don't, even professional can lose them all. So that's what I'm saying. You have to be very, follow a set, like I said, follow a set of discipline, whether it's fundamental or technicals. You've got to follow them. All right. So it's important to be to keep abreast of news and technicals. All right. Looking at the charts, looking at the news, and then you have to make informed decisions. Okay. But you need to know. All right. You need to be informed. I always tell people, you need to be informed to be transformed. All right? So you need to be informed. So if you're not informed, you cannot be transformed. Okay? So, all right. So here we are again. The last time when we were here a month ago, it was at greed. So the market was at greed. So when we talk about market, we usually talk about US market. So, but then if you talk about Hong Kong market, right? Hong Kong market is still probably at fear now. All right? So, but the US market now already not only at greed, it's at extreme greed. Okay, extreme greed. So you can stay so it used to be, the US market used to be swinging between greed and fear in the last, in 2022. And then, in the last couple of months, it swing into extreme greed. Okay? So we know that if you get into the market now, you are not the first one. All right, a lot of people already gotten ahead of you, so you're not getting it cheap. Okay, so that's what it means when you say extreme greed, because most people already got in. Okay, all right. So the question is, a lot of people are asking today, right? Why is it the market is going up? There's so many problems in the market: inflation, interest rate going up, geopolitical problem, Russian war. All right, and then you have the Chinese economy crumbling. All right, the European economy crumbling, everything is crumbling, but the stock market is up. Why? All right. So, of course, the consensus, if you're reading, so this is not from me, the consensus is disinflation. So we had inflation in US going up 9%, and it came down, all right, to about 4% today, and the Fed target is 2%. So a lot of people are saying, oh, the Fed has done its job. So now we are going back to the good old days. What are the good old days? The good old days are the days of low inflation and plenty of money printing. All right? And the good old days are the day they call, TINA. What is TINA? There is no alternative. Right? There's no alternative, because you hold cash, the interest rate is very low. You have to buy something, all right? You have to say, most people just buy stocks. Okay, so disinflation, interest rate has peaked, and soft landing. So we are, it's like last year, beginning of last year, everybody predicting a recession in 2023. So a lot of fund managers are positioning for that. Recession to 2023. But as 2023 progresses, there was less and less sign of recession, and inflation was coming down. Then people start changing their views. And that's why people start short covering. A lot of shorts in the market, and they were short covering, and when they short cover, the market goes up. So if you are thinking of why the market goes up, I think that's why the market went up. All right? Okay, so we are here today. If you want to be investing your money, which is the best performer, I always give this illustration, right? And the illustration is when you are into the advantage of investing or trading in the market is that it's like, it's not like going to a casino. When you go to a casino, everything is chance, all right? And the odds, is always against you. And over time, you go to a casino, you're going to lose money, right? But in the stock market, it's like, going to a racehorse, but it's a special racehorse. Special because now the horses all run already. All right, you don't have to bet before the horses run. The horses all run already. Then you see, hey, wow, this one's stronger. Stronger one, can run faster. Maybe I buy this one. All right? So that is why I always use this rebasing chart. I love this chart because, it really helps you a lot. All right? Because in this rebasing chart now, right, it tells you, right, the top performer is still NASDAQ, followed by S&P, followed by DAX, CAC, Dow Jones, HS Tech, STI, and the last is HSI. Which means if you want to be bullish or something, HSI can be a little bit dangerous, all right? Because everybody is dumping it, right? And you're buying something that people are dumping. Okay, so that's what it means when you are talking about, preference. So the rebasing chart tells you don't have to go and dig out a lot of data. The rebasing chart will tell you what the fund manager buy. Simple, all right? The top choice, tech stock. Second, HSI, all right? But everything is about timing, right? So the fund manager can be favor this, and it goes up, and then you get in right at the top, it crashes, and because it has gone up so much, right, it will fall a lot more than the rest. It could happen, right? All right. So the idea is about timing. So if you want to get into this kind of things, right, you have to watch the chart carefully. See this divergence? The minute it diverges, right, this is where you're going to get in. Right? Not like now, the gap, the divergence is so big. It's so obvious already. All right, too obvious. Anything that is too obvious in the stock market, right, becomes very risky, and therefore you have to avoid it. Okay, so let's get to some fundamentals. Okay, so the fundamental is this. So this is the PMI. So today a lot of people are saying, there'll be no recession. The market is going to have a soft landing. Interest rate is going to peak. But if you look at data, right? So this is PMI services. So PMI services, during the pandemic time, it was this high, 59, and then, after the pandemic, after interest rate goes up, and then it sort of went down, went up, and it's coming off, all right? So that's services. All right. In most developed economy, right, there are two types of PMIs. One, we call it services. Another one, we call it manufacturing. Okay? So this is a services PMI. And most times services PMI are strong, all right? Because most developed countries, right, we talk about services, we talk about tourism, we talk about, utilities, you talk about health, the kind of thing, right? So they tend to be strong. But if you look at the PMI, manufacturing, all right, it's one way down. You see the US manufacturing is one way down, right? So what is trying to tell you, although a lot of people say there will be no recession, but the manufacturing data are trying to tell you that the manufacturers are suffering, all right? Those guys that are producing machines, cars, all right, computers and all that, right? So yeah, those guys are suffering, okay, PMI. And when we talk, so a lot of people say, all right, inflation is coming down, so this is where you get this global inflation, that's how it looks like. So we have the US target, the inflation at 2%, has gone down in like June, it went down as far as close to 3%. But although US managed to bring its inflation down quite quickly, but you look at the Eurozone, right, the inflation is really, I mean, still very high. I mean, for this kind of, for standards like this, that's still very high. It's going to be hard to bring it down, okay? And there's only one country that stands out, China, 0.2 inflation only, all right? So it doesn't mean that inflation, so when your inflation is high, it means you're doing well, you know. There's a lot of demand for a lot of things, asset class and all that, right? Like Singapore properties just keep shooting through the roof, right? No matter what type of cooling measures the market put on the property market, it still go up, okay? Because, you know, inflation goes up. I mean, there's a lot of demand. People, you know, want to buy your goods, services, and your assets. Okay, so there's a demand for it. But when there's no demand for it, inflation goes down, that means no demand. I mean, it's a sign that you're not doing well. Your economy is not doing well. Okay, so let's look at the European manufacturing, okay? So the European manufacturing, right, you look at it, and then you ask yourself, is the world going to recession? Look at that. From January 22 until now, it has been on a one-way streak down until now, the manufacturing. Eurozone, one-way streak down. France, UK, they're all one-way streak down. They never improved. Right? Only the services is holding up in Europe, but look at France. All right? France is like, you know, the services is tanking here, all right? And that is not a good sign. So the question is this, right? The question is, so the expectations now in the market is interest rate has peaked. And I think so too, right? I think so, interest rate has peaked. So the expectation is that the Fed will sort of, after this, the market is expecting the Fed to pause. How long is it going to pause? The Fed said, you know, it's going to be data dependent. It depends on the inflation data that's coming out, unemployment data that's coming out, so that's what the Fed said, right? But the problem is that the market don't believe in the Fed, right? The market don't believe in the Fed. The Fed say, you know, we could still raise interest rate in September, but the market don't believe. The market thinks that with all this data, it's going to pause for a long time. That is why the market is so bullish. Okay, so the market sort of, you know, are thinking that the Fed is wrong. All right. The last time when the Fed said, you know, inflation was transitory, they got it wrong. So a lot of people don't believe in them. Okay. So, but what I want to tell you, right, is that, you know, I mean, I should have shown you this first, but I should have asked you a question. All right. So everybody now expects the Fed to what? Interest rate to peak, and the Fed. So after interest rate peak, inflation goes down, and the Fed goes on a long pause. So what's the next? What's next? They will cut interest rate, right? Because interest rate is too high, right? So when they cut interest rate, this is what we call pivot, the Fed pivoting, all right, from raising interest rate to start cutting interest rates. And we all know that when the Fed start cutting interest rate, it's going to, they will just keep cutting for a long time. So what do you think when the Fed cut interest rate? Will the market go up or go down? Up or down? Huh? Up or down? You think it's up? Hey, hello, the answer is there. The answer is there, right? So a lot of people think, right, when the Fed cut interest rate, right, market will go up. But if you look at history, look at that, all right, here, this is where Fed fund rate, this is, the black color is Fed fund rate, right? So the Fed fund rate goes down, all right, and when they raise interest rate, market actually go up. You saw that? The raise interest rate, market go up. And when the interest rate actually pivot, see, this is where it pivot. Interest rate went up, start coming down, right? Fed fund rate coming down. Then you see the market actually went down. So in history, it's like that. When you start pivoting, right, the start of a pivot, the market don't go up, the market go down, all right? But, you know, a lot of this kind of, the problem with a lot of time, this kind of historical data, right, a lot of them somehow don't work anymore. I'm not sure it's going to work this time again, all right? But the Fed is going to pivot maybe next year. So history tells us that when the Fed pivot, when they start pivoting, the stock market will go down, all right, not go up. But after a while, you see that? After a while, all right, the market, the prices, so the interest rate go down, start going down here. This is where the start is, and that's where the interest rate go down. After a while, then the market go up. So at the initial phase of the pivot, the market will go down. Okay? So I'm giving you a little bit of, you know, what's that? Financial history. Okay? So we're finished now the big picture. And let me look at the time. Wow, we still got a lot of time. Still got a lot of time. I love time. All right? Because I love to tell you stories. Because a lot of you, I know, you know, don't keep up with news until every 1 month you come here and Robin feed you everything. So for the next 1 month, no need to listen to news anymore. Okay, so China. All right, so I'm going to tell you, what I'm going to show you now, right, is, and the data coming out of China, they are horrific. They are not just bad, they are horrific. All right, yeah, horrific. And that is why, but a lot of these news are already baked in. All right, they are horrific, but they are baked in. Okay, so you don't want to look at this news and go to you know, tomorrow Hang Seng open and short the market. All right, so this news was just out last night. While I was preparing this slide, right, this news came out, and I saw it. All right, and it says that the Chinese industrial profit slump last 6 months, 16%. All right, so 16% is like, okay, no big deal, you know. But then when you look at history until 2021, right, it has never happened before. So you know that in industrial profit slump, right, is one of the worst in 10 years. So this is not just a simple, normal recession. It is something, the underlying, right, is quite serious. All right, looking at the data, okay, underlying quite serious. So, and as I go on, I'll tell you how serious it is. All right, so the China factory activity shrinks for third month. All right, and it says here, Chinese factory activity in June contracted for third month, while the non-manufacturing activity was at its weakest since Beijing abandoned its strict zero COVID policy. So it is at weakest. All right. Property. So property, June property sales fall at the fastest. So you're hearing all these words, right? Like the weakest, the fastest, the biggest drop, that kind of thing. Right? It's not good, all right? Yeah. So, and these are all the latest news. You know, they are not like, you know, news 10 months ago. You know, they are just out of the press. Okay. So why is it that I think of all the news, right? So this one, right, concerns me the most. Why? Why do you think property concerns me? You know, because property makes up 25% of the GDP growth in China. You know, in China, right, back then, so a lot of people are asking me, right, why don't China just do what the US do? Just go to the printing machine and print, hand out checks to all the citizens, hand out checks to population so that, they can go and spend, and then we have, huge consumer demand, and then the economy recover. The answer is China cannot print like US. They have to make their own money, all right? They have to go and look for their own job, all right? Because you don't have a golden goose that keep laying eggs for you, all right? You don't have a golden goose. US got a golden goose. All the countries, right? They are white, right? They got golden goose. Okay, so they got no money, they just go to a golden goose and ask the golden goose, lay some golden eggs, and they eat it. All right? They all have this privilege, but outside of the white man country, they don't have this kind of privilege. You have to look for your own job, look for your own earnings, make your own earnings, all right? Blood and sweat money. So China, right, when it first started coming out, all right, of remember, they were a very poor country, communist, and they started opening to manufacturing and all that. Right? So, two things, right? It opened up, Ting Xiaoping opened up the economy, right? Got investors came in, they start, manufacturing, and that was a low-cost so China became a low-cost manufacturer of the world. And then a lot of investments start coming in, right? And when investment came in, the Chinese only have two big growth drivers, right? They build as fast as possible. Infrastructure, railways, roads, everything already built. And then they built house, properties. So property went sky high. And then Xi Jinping came and said, property are not for speculating, they are for staying. They are homes, they're not for speculating. All right? So today, the two twin engines, all right, property collapse, like what you see here, and infrastructure investment also collapse. The two twin engine, growth engine in China. And therefore, you see the Chinese second GDP missed. Another, not only missed, right, but something very important, record high youth unemployment. So the youth unemployment in China now, all right, is 25%, which means 1 out of 5 graduates don't have a job in China. And that is why, right, recently we had the Chinese Politburo, chaired by Xi Jinping himself, all right. They came out with, they announced that they're going to be dishing out stimulus, economic support stimulus. And the reason is because if you have so many youth unemployed, sooner rather than later, you will have social unrest. Okay? So they see the urgency of it, and they say we cannot sit down and do nothing anymore. All right? We have to start working in the economy. And that is why in the last couple of days, you saw the Hang Seng Index going up. Because this one comes from the man himself. All right? We got to do something about economy. Okay, so you can see, China, everywhere good inflation, China deflation. Retail sales grew 3.1% below market expectations. Fund managers and advisors are struggling to attract investment into China-focused product. All right, so I only got this from Reuters last night. All right, and it says that even our GIC, all right, Singapore Sovereign Wealth Fund, all right, Jeffrey said, has incrementally moved its capital to sectors and countries benefiting from shift in global supply chain, and it has been basically out of China into countries such as Mexico, India, Indonesia, Vietnam. GIC is out, right? But maybe when GIC is out, it's time to buy. Because they always get it wrong, right? Yeah. Okay, anyway, GIC is out, okay, of China. They're slowly pulling out of China, okay? And then, remember when Trump came to power and he was the guy that started all tariffs, and the tariffs are starting to work in China now, all right? China share of US import is down 16-year low, 16-year, all right, of 15.1% from a peak of 21%. So it's coming down, all right? Which means, you know, they are doing less, US is doing less business with China. Okay, Trump tariffs. So who benefits from US pulling out of China? So when we say US pull out of China, it's only US. All the white men, it's a concerted effort. They all pull out together, all right, of China. So who benefits? India, the ASEAN country, they benefit. So I won't go through this. Okay, so China, somebody say, it's an accident waiting to happen, all right? And they are comparing the Chinese economy to the one in 2015. So in 2015, right, there was a growth scare. Manufacturing PMI went below 50, import falling, deflation rising. The real estate crisis is worse than 20. But today, the real crisis and everything else is worse than 2015. So that is why this author said, there is an accident waiting to happen. Okay, you can see manufacturing down, import down. Home prices, all right, 2015 was the worst. You say that? 2015 was the worst? And today we are having the 2015 scenario, except that today, all right, let me see, all right, except that today, the Chinese housing market, compared to 2014-15, is at least 2 to 3 times bigger. So the problem becomes 2 to 3 times bigger, all right? And then also remember that the Chinese population is an aging population. You're not getting younger, right? So when you're not getting younger, you don't need so many houses, all right? You don't need so many houses. So unless your population is increasing, like India, you need more houses. But China, population is aging, so you don't need so many houses. All right, you don't need so many infrastructure because people are older and they tend to stay in, in a house. They don't go out too much, and therefore today, the problem is a lot worse. Look at the consumer demand. All right, it's not gone down. It's plunged, you know. All right, plunge, and consumer spending has gone down. Export also go down. Land sales. Why is it that when land sales go down, it's very concerning? Because in China, like I was telling you, in the last 20 years, the main driver in Chinese growth was property and infrastructure. And in property, the local government sell land, all right, to make money. But now, land sales is down, and the local government now has a lot of debts they cannot pay. Right, that is the problem, all right? And so the market is saying, yeah, there could be some default in debts. So the Chinese yuan is expected to, with all this backdrop, Chinese yuan is expected to go down. And so you ask, so this chart says, okay, if Chinese yuan go down, where will the market hit? If the Chinese yuan go down, market will go down, all right? So this is according to the chart here. So current economic condition in China increasingly resemble 2015 or maybe even worse. All right? The main example is the severity of real estate crisis, the possibility of deflation, and in order to mitigate this scenario, all right, stimulus are needed, and therefore the Chinese authority has acted. Right? So far, the policy has been predominantly reactive, increasing the chances of a stock market crash. So remember that in the past, right, the Chinese government, they come up with stopgap measures, small measures. They don't do what they do in 2008, they do QE. In 2008, they do QE, they print a lot of money. But this time around, they're not printing. They just, like firefighting, decrease, lower interest rate, the PBOC, there's lower interest rate, increased liquidity. But those measures are not working, and therefore, 2 days ago, they announced that they will do something more encompassing, all right? And the reason why the market has been running is most times, right, when after the Chinese government announced stimulus and all that, within one day the market go up and then die already, right? But this couple of days we saw, the Hang Seng market is resilient. Why? Why do you think so? Why do you think this time is different? How come it's resilient this time? Anybody? What do you think? Anybody? What do you think this time is resilient? How come the market don't go up? I mean, don't go down after initial phase? Sorry? What, sorry? Big Cannon. Oh, okay. Yeah, partly correct because the Xi Jinping himself came out, all right, to chair the meeting and issued a statement. All right, so that's one. The second thing is that the Chinese government also gets smarter. They know that if they announce the measures, after a while, you know, the investor, after sort of knee-jerk rebound, the market will come off, right? So this time around, they didn't say anything. They say, we will do it in a timely fashion. When time is up, when it's required, we will, you know, we will announce the stimulus. So because of that, right, the traders now are scared. They're scared. If you short the market over the weekend, so every time, so what is the strategy now with this? So the strategy now, right, with the Chinese, how the Chinese government is reacting to the current economic downturn is that they want to support it now. So there's an urgency to support it now, right? So which means there's a lot of stimulus to be announced. So if the market falls, they will come and support. So every time when now HSI fall, all right, you come and buy because there will be stimulus to support the market. Okay, so that's how it works. Okay, so that's what I think. So this is what I talk about. The Chinese government vow to boost Dutch's economic recovery. Okay, so DLCs. I think Marcus already showed you this chart. All right, we rank them. These are the strongest to the weakest horse. Okay, so the strongest, PetroChina, BYD, China Mobile, Alibaba. So why do I have to show you this? I show you this because if the market goes up a lot, all right, and it's time to come down. In the Chinese market, they are not like US market. US market come down half a day. After that, go up in another 3 days. All right. But the Chinese market, when it start coming down, very hard to put a brake to the downside one, you know. All right. So which means it's very important for you to identify weak stocks. So if you want to short, right, short this bottom four. Quite so, Meituan, Wuxi, and JD.com. If you want to be shorting, right? Don't try to short China Petrol, BYD, China Mobile, all this. So the top four are for shorting. So that is my portfolio. All right, that's what I do. So I never buy Kuaishou, Meituan. I never buy those. If I'm bullish, I'll buy BYD, China Mobile, Alibaba, or even Tencent. All right, I will not buy the last four. Right? So because they are by rebasing chart, they are weak. Okay, so one of the key index that you could be watching for is the real estate index. Remember I said real estate made 25% of Chinese GDP. So as long as the real estate index, right, don't like turn out into like, you know, everything always show in the price first. Okay, so if the real estate sort of break out, right, say into the 4,005 or so. So this is where you got to watch out because now the market think that maybe really think that the Chinese real estate is going to recover. Okay, so we have a little. So if you're on the chat group, right? So this is the chart that I showed on the chat group, and I said, hey, you know, Hang Seng, right? For the first time, you see that this little break. For the first time, it is breaking out very early. All right, breaking out the Ichimoku cloud. So it has been below the Ichimoku cloud for a long time, and it was the first break. And true enough, today we have the Hang Seng index going up another 2%. Okay, so this is a bullish indicator for Hang Seng breaking out of the Ichimoku cloud. And I have like, these are just, you can go to the chart and see these are the resistance which I translated into my target. Okay, so if you want to be investing long term, right, in the Chinese market, like I was telling you, that even if you have been to the first DLC talk, all right, the Chinese government is now emphasizing on SOE because they think that the SOE versus POE, which is the private enterprise, all right, has largely underperformed and is not showing their true value. All right, so just want to read it for yourself. I talk about it in the last DLC talk about Chinese government trying to prop up the values of SOEs. So the SOEs, right, they, in most sectors except energy, is outperforming, all right, the Chinese index, right? So they are beginning to outperform. They are beginning to outperform, all right, the main index itself. Okay, and that's the importance of SOE because that's the reason why the Chinese government wants to, be supporting the SOE because they play a vital role in the Chinese economy. And in the DLC, there are two SOEs, and they are PetroChina and China Mobile. And then, if you are looking at PetroChina and China Mobile in the last 2 days, they are not moving a lot. So some of you ask me, hey, how come when the market is so good, this PetroChina and China Mobile don't move? And the answer is because they are defensive stock. All right, defensive. They are very defensive stock. They high dividend defensive stock, and they have moved up quite a lot. So when Xi Jinping announced the stimulus measures, the internet stocks were the one that took off. The growth stock were the one that took off. So this one took a little backseat. But on the long run, they will still continue to outperform. Okay? So this is where China Petrol is, the chart. Look at that. All right? And if you look at China Petrol, you would, if you are into China Petrol, you are still at the year high or very close to the year high. Although last 2 days never go up, but you are close to the year high. You are not losing money. But if you have invested in any other Chinese stock, you would have lost at least 30 to 70%. All right. So this guy is still making money. Good. And then China Mobile, same. All right. Hugging very close to the year high. Okay. So if the market gets very weak and sort of dip a lot, so these are the two stocks that you should just buy and hold because they are fundamental stocks. They are not going to go bust. All right. They are SOE stocks. Okay, so I'm done with China. Am I done with China? No, not yet. I just flipped somewhere. Okay, sorry. Okay, so now I want to talk a little bit about Chinese stocks. All right. So I've just done with China Mobile. So we talk about BYD. Okay, so I always so the BYD now I think it's better for me just to show you the technicals. So the BYD is on an uptrend, and if you see here, right, it is even breaking above the year high, right? So this is the year high. It went above, and if you're in BYD, you would have lost money. You would have made money, and it's outperforming the market. And I think if the Hong Kong market keep going up, BYD will go up to 294, and that's where I think it will start coming down. So if you look at BYD, right, although it's a strong stock, but it follows a trend. You see that this trend here, it follows, just follow that trend. All right, just follow that trend, sell at the top here at 294, and when it bounces back down again, you buy. Okay, so, and this trend is not difficult to draw, it's very easy, right? Just have to draw the trend channel here, follow my charts. Okay, so the fundamentals of BYD, I think a lot of you know, they are one of the, they have the, the Chinese EV markets, right, you see, the Chinese government, right, they have earmarked EV as one of the new economy or new industry, all right, to replace property, to replace or to to complement property and infrastructures. Okay, so this is, and that's why the Chinese governments, right, they give a lot of subsidies to EV companies. So here, I don't want to read through them. You can read through them for yourself. Basically, it says that BYD is one of the major exporter and manufacturer of Chinese, okay, of Chinese vehicles, and the Chinese government very supportive. So when you have Chinese government very supportive of EVs, they give you tax exemptions policy until 2007, and therefore you have the head start, okay. So and you could see that BYD, right? They are the China top 3 automobile groups, right? Shares of sales of vehicles, right? Here, they are the top seller, Chinese vehicle, and if you look at the top best-selling PHEV models in Q1, they were all manufactured by BYDs. Okay, so, and then compare BYD to Tesla. All right, BYD sold 700,000 already vehicles, okay, of Q2, half year, right? And Tesla only managed something like 466. So they're even selling more vehicle than Tesla. So and BYD is branching into all over the world, Europe, East Asia, Australia, and they're building plants in Thailand, and they'll invest another 620 million to build industrial complex in Brazil. So they're all over the world. Okay, so this one, Tencent, a little bit underperforming. You can see it's still on the downtrend, right? In spite of the stimulus news, it's not gone down up a lot, all right, Tencent. But I think sooner rather than later, they will break out and from the current price and maybe hit the next. So my target is 376. Okay, so this is Tencent's financial highlights. So I don't have time to go through them, but I think one of the key change for Tencent business outlook is the Chinese regulator has granted a batch of new games, right? So their games has got very good profit margin, right? And therefore, the Chinese government now are granting them new game. Last time they banned them from games because they don't want the kids to play games at home, right? So they banned them. But now business bad, so the Chinese government now no choice, all right? Kids now get back to games lah. Okay. So Tencent results 16 August. All right. Take note, 16 August. Big day, and I think it could be good. Okay, so Alibaba is doing better, and one of the reasons why it's doing better is because of Ant's IPO, maybe, all right, is making headlines. So I think that, and Alibaba, if you look at Alibaba chart, right, it actually broke out of the downtrend, okay, and so it broke down a downtrend. So this is a very nice chart. So you saw that even when it went up and retraced, this line became the support, and after that, it was going up. So I think, it's 94 cents now. It could hit 101, 102. Okay, so unless, right, there is a structural change, all right, structural change or catalyst that will turn around the whole Chinese economy, then we will have a sustained bull run. Otherwise, it will continue to be a rebound. So you just remember, you're playing a rebound. You're not playing a sustained long-term bull run, okay? Unless there is a game changer that comes out from the Chinese government. But what I think, all right, my personal opinion is this. Okay, so China got a big problem. Why? First, remember during the COVID, they locked down, and then they punished entrepreneurs. Jack Ma got locked up, all right? And then Xi Jinping was very afraid that he may lose power. So all the very promising entrepreneurs, he changed them. All the CEOs, chairmen, of those big companies, he changed them. And the world now, they look at what Xi Jinping do. They got afraid, and they say, how come this guy is against entrepreneur, all right? But he was just trying to hold power, right? And then he was clamping down on property. He was clamping down on internet companies, and then he locked down. And a lot of people think it's senseless. He locked down for 3 years, right? China for 3 years. No business. A lot of things went down. Okay, so this is not the worst. It's like everything comes when they say that when you're poor, right, even your roof will leak. That's what happened, all right, to China, all right. So, and I think the most important thing that happened is geopolitical. So while all these things is happening, there's, it's a self-inflicted problem, right? When all these things is happening, all of a sudden Russia attacked Ukraine, okay? And China pledged to help Russia and be a friend. Okay, so now the West look at China, wow, you are a friend of an enemy, you want to be number one in the world, that kind of thing, right? So, of course, now China become the number one enemy of US, right? So, what the West did, what US did to Russia, all right, it sanctioned, it confiscated their foreign reserve of about 700 million, all right? They are actually doing stealth, stealth quietly, all right, to China. So China, businesses are getting bad, and now the white man is pulling out. So what happens when all these things happen together? The white man pull out, you destroy your own economy, now there's a vacuum. So they need to overcome it. It's a sweet spot. I mean, it hits you like once in a lifetime, that kind of thing. It happens, everything's happened together. The Chinese government make a wrong decision, the Ukraine war and all that, right? So I think the geopolitical problem is one of the worst, because when the white men, they uproot, right? They uproot and they go to India, they go to manufacturing plant in Vietnam and all Southeast Asia, all over the world. They're not going to come back tomorrow. So it's a long-term problem. It's a structural problem. So it's not going to come back tomorrow, all right? So I think the geopolitical problem is bad, all right? For example, Foxconn. Foxconn, right, got like, I think 300,000 people workforce, and they already pull out about 25% already. All right? And slowly, the first 25% out, another 20% will be out, and slowly no more already, Foxconn. All the factory now shipped to all over the world and to US. Okay? And then China will be left with a hollow place. And once your economy is down and you cannot help yourself by printing, you are in deep shit. You are in deep shit because you cannot help yourself. All right? In US, problem, just print. No problem. Okay? So, Alibaba, I think the short-term news is good. So, ride the bullish short-term trend, okay, but know when to sell. So, I give you two key points, all right? 101, 103, it will hit and it will come down. All right, when it comes down, buy again, and if it breaks, it's 110. And 110, call it a day. All right, sell it, wait for it to come down, and then buy it back again. So I don't want to read through all this business outlook. So Meituan is one of the weaker ones, all right? Look for a good sell level, 160, maybe good short, all right? So don't buy Meituan, buy Alibaba, Tencent, and China Petrol, and that kind of thing, all right? So this is just to give you a target if you really want to short, because Meituan business space, right, is very competitive now, So competition heats up. Meituan will continue to increase aggressive strategy such as discount and rebate. So these are not good things, cut price like Tesla, cut car prices, discount rebates, they are not good. Okay, now this is my Hang Seng trade plan. So go back and replicate this. Okay, so I think with this trade plan, technically, you see Hang Seng, right? This is a very nice trade plan. All right. Why is it a nice trade plan? Let me show. Okay, so in this DLC, right, meeting, right, I'm going to make it very special. I'm going to give you a technical analysis course. Are you ready for it? Technical analysis course is worth $4,000. All right? And but I hope you have enough time for technical analysis course. Okay, so if you guys are ready for it, let me share you some technical analysis. Okay, so you see, right, that why, right, this trade plan of Hang Seng is good. Because this plan, right, it managed to capture two bottoms. See that? It managed to capture two bottoms. And when Hang Seng corrects, right, it captures many times, you see that? The bottoms here. All right, and rebounded. So these lines are reliable. So which means that if Hang Seng fails, for example, it goes up, so now Hang Seng is hitting a resistance here. All right? So say it fails, okay, and it comes down. Where do you buy? You buy when it touches this line again, you buy. Very simple. Okay, so you just have to put the line on there, all right, and then you buy. But if Hang Seng goes, if Hang Seng breaks out, all right, your next level to sell will be 2550, or when it touches the line. So I don't know how much exactly when it touches it. I just extrapolate only, all right, about 2550, all right. Maybe the next target if it breaks out. So I think good chance for Hang Seng to break out if China, if the Chinese market is supporting the market now. Okay, so now we go to Hang Seng Tech, all right. So Hang Seng Tech, right, is like also but a little bit more bullish than Hang Seng Index, okay. And so Hang Seng Tech, right, I'm a little bullish. And I'm talking about, you see this resistance level at 4825, okay? So we take the resistance level from here, 4825. And then the resistance level, right, coincides with the Bollinger Band, you see that? And the Bollinger Band together. So this is, so how many of you use indicators like Bollinger Band? Anybody? Put up your hand. Okay, not a lot. But let me teach you, all right? Bollinger Bands alone is not good enough. You've got to use Bollinger Bands with trends, okay? But if you really very blur, all right, and then you don't know how to use indicator and all that, all right? Bollinger Band very easy to use. Just go to any chart, insert Bollinger Band, the whole Bollinger Band falls on there. And most times, right, Bollinger Band, they work quite well, all right? They can help you to find bottom. You see here? Bollinger Band, got a bottom here, right? So it was going down, everybody was selling, all panic, right? The Bollinger Band hits the bottom, bounce. You see that? Here also, right? You see? The market fell. It hits the bottom Bollinger Band here, and then it bounced. Okay? So Bollinger Bands are good. All right? They're good because, the theory is Bollinger Bands is that anything that goes out of the mean must come back. Okay? So it's like overboard. It's like a rubber band, pull, then you got to just shrink it back again. Okay, so Bollinger Bands. Okay, very quickly, inflation. Okay, so we have three big words here: interest rate, inflation, and recession. So these three things, right? So tonight, we have to understand all that. If you don't understand all these macros, it's going to be hard for you to understand where the market is heading. Okay, so you can see that the reason why the market has been so bullish because of this. All right? Inflation keep coming down, and people think when inflation comes down, problem solved, stop interest rate will stop. All right? But then, today we have our core, our services versus core PCE, all right? They are also coming down. The rates are coming down very quickly. So inflation, the fight of inflation narrative is changing, okay? Given the Fed still firmly on economic brake pedal, inflation is still above the Fed's target, and banks are unwilling to take risks, and therefore credit will still be tight. Okay, so now, think about it. What can happen that will change everything around? So remember, last year everybody was talking about recession, and recession never come, everybody shock cover, then the market ran up a lot. So, but now, almost everyone is convinced that we are going to have a slow landing, maybe no recession, and that's what Biden said, that's what Yellen said, and that is probably what the Fed is thinking, all right? So no recession. So this is already like consensus, global consensus everywhere. But if this consensus change from got recession, become no recession, what will happen? The whole market will topsy-turvy again, will turn around. Everything will start turning again because the macro change. Okay? So now everybody now believes. And one of the reasons is because they believe that the CPI will go to the target. Okay? So, but let me give you my take. So there are a couple of things, right, in macros that you have to look at. A couple of things you got to look at. All right? One, look at this thing that is causing inflation. All right? Inflation. One of the key inflation contributor is crude. And crude is breaking out. See, the charts, you see, this chart that I have, right, all right, sort of managed to catch the bottom here, the crude, and it's showing that, look at this, look at this, look at this, all this price point that is hitting, and it's telling you that crude is going to 85. 79 is going to 85. So whether it's going to cross 85, I don't know. But when it crosses 85, it's going to go 100. Okay? So can you imagine crude is at 79. When it goes to 85, people will start getting nervous. Because then people will start thinking of inflation, right? Because this is one of the major contributors of inflation. When crude goes up, oil goes up, everything else goes up. And then commodity, after a long downturn, is turning. It's turning the corner. All right? Crude, commodity, these are the things that will cause inflation to go up. All right? And, you know, your inflation data are always lagging. So the next inflation data that comes out, if it is tracking commodity, it's tracking crude, then looks like it's going to show an uptick. Okay? So the other thing I want to talk about is the dollar de-dollarization, and I believe that the process has begun. All right? So the process began when US sort of froze or took Russia out of the SWIFT system and confiscated their foreign reserves of 700 million. All right? And that woke up everyone, the central bankers all over the world, because could we one day be a Russia, right, where we get our money all get frozen? So everybody now try to switch out of the dollar. So that's why we believe that the de-dollarization, right, I believe it has begun, but it will take a while. It will take a couple of years, maybe 5, 6 years, I don't know, maybe 10 years. But it has begun, which means, right, in the long run, right, dollar is going to go down. All right? So when dollar goes down, what will happen? When dollar goes down, you will have inflation or deflation in US. Huh? Inflation, right? Yeah, dollar goes down, the money is cheap, right? So they will import inflation. So this is inflationary. Interest rates. US interest rate is, all right, 3%, that's right. Okay, so we talk about, just now I was talking about the Fed. So the market and the Fed got different idea now. All right, so the Fed is saying, no, I haven't, maybe September still got one rate hike. The market said, no, cannot be. You never had any more rate hike. All right, but what if it has a rate hike? The market is now saying no rate hike. Pause until September. And what if the data comes out? What if oil prices shot up to 85 to 100? All right, and then inflation start turning. Then people start believing there's a rate hike in September. Then the market will start crashing again. Okay, so Powell himself said that the Fed raised policy rates from 0.25 to 0.5. Central bank say inflation remains elevated, so they think it's still elevated. And Powell is saying now that the rate hike is possible even at September, but the market don't believe him. Okay, so but one thing I want to say, right, is that my opinion. That's what I think. All right, I think that the Fed is impatient. All right, impatient. Impatient in a way is that you're from traditionally, right. As a rule of the time, it takes about 18 to 24 months before monetary policy kicks in. So if you use that benchmark, and now we have the biggest rate hike in the last 20 years, okay, the recession may kick in, all right? 18, 24 months, 2 years from now, which is when it first started was about a year ago, so maybe next year, because it's something that's lagging. All right, so you saw in the PMI data, the PMI data are all not doing well. All right, and with this, the lagging effect of the interest rates, maybe recession will come. All right, okay. So this is the Fed Fund projections. I will not go through. Okay, so I have to go through very quickly. So this is the so very quickly. I don't think I have a lot of time. We got to be out here by 9, right? Okay, no time. So got to skip this. All right. So but maybe in all these slides, I just want to sum up. All right. So I got about 20 slides here, but I'll sum up in 2 sentences. All right. So remember, we're investing. Okay. Remember what I talked about on the chat group, right? When I said the chat group, don't fight the earning seasons. When the earning season starts, right? I mean, I've been investing in this market for 30 years. When earning season starts, especially during the period of the big techs, right? Big techs always announce super results. That's why they call big techs. Okay? So when earning season first starts, don't try to short. They're normally bullish, buy. Always buy. All right? Then when all the big techs earning is over, and we are into like the last 1 to 2 weeks, the stock market, the US market will start coming down because all the good news are already factored in, right? And then what happens is that during earnings seasons, analysts always, all right, give low expectations of companies' earning, so that when everybody wants the stock market to go up, it's in the interest of everyone in the industry for stock market. Nobody wants the stock market to go down. Right? So analysts always give a low expectations of earnings, and when the earnings come out even lousy, it's beat expectation. Then you go up. So everybody buy. So if you don't believe me, you just go and see. Almost every other earning is beat one. How many earnings go down one? Most other earnings beat one. Beat, the thing go up 5%, by 6%. Easy to earn. All right? So earning season always stay bullish, okay? That's what I did. I tell you about my in the video. How many of you watched the video of the bank DLC? Okay. Now, if you have applied that theory in the video, you would have made money. So I was on the chat group. I was hinting to you guys, hey, we have 1 week to go. UOB, the earnings is coming. All right. Somebody is going to ramp this thing up very soon. All right. True enough. Boom, boom, boom. All right. You went. So everybody now expects the earnings. So for Singapore banks. All right, don't expect earnings to collapse until DBS is over. All right, so everybody now expect DBS, so they will keep ramming DBS up until the earnings date. So DBS earnings is next week. Okay, so after the earnings, all those who want to buy already buy. There's no more buyer anymore, so only left sellers. And then it will come down. That's how it works. All right, 30 years in the industry. In my 30-year industry, there was, how I learned about all this? I saw a bunch of full-time stock trader. Every year, right, they trade earnings, right? If the earnings is every 3 months, so 1 year got 4 times, right? 4 times. So they only trade the banks 4 times. How they trade? 2 weeks before the result, they buy the banks. The bank result come out, they sell. After they sell, they come down. All right? 1 month later, they give dividend, standard, right? So 2 weeks before dividend, you buy. Everybody buys a dividend. When the ex-dividend, you sell. You're out. All right. So these guys own, they full-time just to do this, make a lot of money. And they teach me, it's easy. Yeah. And they tell me, don't short before earnings, especially the big techs. Okay? Yeah. Okay, so I will skip all this, right? Basically, this one I'll talk about all that kind of thing. All right, so no time already. Earnings season, that's what I'm talking about. So I remake everything into like, all right, so maybe I want to talk about this. Okay, so this is expectations, okay? Expectation for end of the year. All right, so you still see a lot of people expecting until end of the year the market to go down. All right, these are all the major institution banks. They still expect end of the year market to go down. That is consensus. All right, but although the market is up, right, actually earnings is not that good, all right? Earnings, the EPS are down about 10 over percent. See, S&P likely to report declining earnings for the third quarter, all right? Yeah, but, okay, so what's this? Okay, so today, active managers had less than 20% exposure to equities last October, all right? Today, their equity exposure has jumped to 99%. So almost everybody is invested now, all right? So all the bears has become bull, basically, all right? That's what it's saying, all right? So the early earning result 2 quarters have been mildly disappointing. You can see from this figure, all right? It's mildly disappointing. So it's not that good, but the market is, not taking hit. Valuation is 19, all right? So we are talking about on an average 14, 15, and we are doing 19, which means valuation, you are buying for valuation, is not there, all right? Earning growth estimate falling drastically. The market is still going up, all right? NASDAQ is more expensive over the last 6 months, slowing US bank growth, loan growth, and all. Okay, so this is one chart I want to show you, all right? And this line here, right, is the fifth, the chart that shows stocks that takes 50 days high, all right, 50 days high. In 50 days, how many stocks are taking new high? Okay, so the stocks that are taking new high is declining, all right, but the NASDAQ, is this NASDAQ? Yeah, so NASDAQ is going up. Okay, so declining. And if you look at here, right, when this phenomenon happened here and here, the market crashed. All right, it's happening again and it's beginning to happen again. All right, so I show you that. And if you look at, although NASDAQ is very bullish, but you look at the NASDAQ price and the MACD is diverging. Okay. So Apple is going to report results on the 3rd October, all right, sorry, August, okay, and then maybe NVIDIA 23rd. So NVIDIA is the most important because this is about AI rally. So everybody now, when NVIDIA is about to report results again, the week before, I think NASDAQ will start going up again, all right? So you have to do all these results, must be very careful, all right? Apple results, I'm not too sure, maybe could disappoint. All right, Apple could disappoint. I think it could disappoint, okay? All right, so very quickly, tailwind, elevating. Okay, so people, why they don't believe that there is a recession? US economic growth accelerated in the 2nd quarter, weekly job claim come down, all right, US job number cools, wages keep going up, service sector picked up, all right, these are all bullish sign, bullish indicator, all right? Okay, super core CPI is collapsing, inflation is collapsing, travel stocks are going up strongly, small businesses are recovering, all right? So those are the tailwind, but these are the headwinds, all right? Headwinds is that the yield curve is inverted, all right? So I mean, I think a lot of you probably have heard of this thing about yield curve. So anybody don't know about yield curve inversion? Anybody? What is yield curve inversion? Anyone don't know? All right, so everyone know, right? Good. So when a yield curve is inverted, all right, it means that the short-term interest rate is even higher than the long-term, all right? Which means it's the spread between 10-year and 2 years, okay? That's what you're saying. So, and this yield curve inversion, right, has never failed the record. So when there's an inversion, between 10 to 18 months, recession will come. But this time round, hasn't come. That's the problem, all right? That's why it's confusing everyone, all right? So, but if you look at statistics, right, there is this thing, yield curve inversion has never gone wrong, all right? Has never gone wrong, all right, to usher in a recession. So let me just show you this. This time round, right, the yield curve inversion, right, is even more severe than the last 2 rounds in the last like 30 years. You see the yield curve inversion here and here, and we are even below there already. No recession. So a lot of people is confused. Okay, so that's how serious it is, right? And this report, I got it yesterday. U.S. commercial property delinquency rises above, and some companies have defaulted. Manufacturing slows. We had one of the biggest fall last week on NASDAQ. Is it a sign that market is coming down? Leading indicators showing recession. Bankruptcy is going up. U.S. equity has become highly diverged. All right. Okay. So jobless scheme is going up. Recession. All right. So hourly earnings, they are decelerating. So can China come to rescue? The answer is no. And what I want you to see is that, you see, most of the world, the PMIs are negative. All right, they're below 50. So when it's below 50, it shows that manufacturing is contracting. All right, so this is also added evidence that we could have a recession. Okay, let's very quickly. Okay, so NASDAQ, right, has got one of its best run in history this round. 5,000 points from the bottom. Here also 5,000 points from the bottom, and we have a correction. So I think every 5,000 points, even if it's going up later, but we should have a correction. All right, so this is NASDAQ, and so this is very key, right? So NASDAQ, right, is an inflection point. It's here. It's an inflection point. So this is a trend line. So if tonight NASDAQ drop one more time below here, then things can become ugly. All right? But if NASDAQ stay up for tonight, then the uptrend resumes. So don't short it. Okay? So very easy. One straight line here. Go back and draw it. Investing can be that easy if you want to care to do some homework. Okay? So this is it. And NASDAQ is chuckling outside. You see these Bollinger Bands? So when a stock becomes how do you know a market or a stock is very strong? All right, one of the indicators is trading outside the band. You know, this is a Bollinger Band, and the prices are even trading outside Bollinger Band. It tells you that it's very strong. So this is what is happening to NASDAQ. All right, at the moment it's still very strong, but look out for this trend line. Okay, if it breaks, then it could go to 18 and 14. Okay, I want to show you something interesting. Okay, so this is my proprietary strategy, and I want to show you because I don't know how long I have, how long more I can have opportunity like that to see you face to face. So I share you strategy. Okay, so this is S&P. Okay, you see the trend line I draw here? All right. You see the different colors? Do you see the different colors? All right. So this color here is the most important. All right, because this one, right, this color is where, all right, although the market is going up, but this is the core trend. Core trend means, all right, if you can replicate this trend throughout the price action, you can make a lot of money. Okay, so the thing is, this core trend, right, has been pointing to S&P hitting 600 as the top. All right, so far, this core trend has worked very well. Every time it hits, you see it comes down, hits, it comes down, hits, comes down, hit this line, major correction. We're not talking about small correction, we're talking about big correction when it hits the line. All right, so here again, we are hitting this line again. Here, you see, when it hits, it pulls back a lot. And this line can also become support. Okay, so I'm telling you that from my proprietary model, S&P has hit a macro target point. Okay, Dow Jones. Okay, so I was waiting for Dow Jones, right? Because Dow Jones is the weaker among the three. Right? Among the three indexes, is the weaker. And I was waiting for Dow Jones, right, from here to go and touch the Bollinger Bands. And it did 2 days ago. Right? It hit the Bollinger Bands. And that is also a macro target point. Okay, and let me see whether it's my, where's my NASDAQ? Oh, I think I've lost one chart. Never mind. Okay, so this is STI. Okay, so the question is, will STI go further? So the answer is, okay, so STI, right, not difficult to play. You know, our STI, right, never go on a prolonged uptrend, just like the US, right, go for like 6 months, 1 year, 2 year, 3 year, you know, go up. No, STI never do. All right, STI always go up and down, up and down, up and down. All right, so you must know how to catch it correctly, like a frog. All right, so it's like a frog. You see that? So STI, right, it moves within this range here. You see that? Up and down, up and down, up and down, and now it's hitting target at 3385. If you believe in this, it's close to target again. All right, which means if you want to go and buy UOB and DBS tomorrow, when it goes up another $1, it's not advisable. All right, because this rubber band is stretching very, 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 very far already. It may snap back again. Okay, so these are the points that you should not go. Okay, so this is what we're talking about, all right? So by next week, 4th of August, next week, all the bank's results will be over. And normally, after the bank result over, those who want to buy already bought, the market will start retracing, okay? So better go and find the short DLC lah. Which one? Better check first, which one? Because when time's up, you cannot find the right one. You know, lose a lot of time. Okay, so go and check. All right, so DBS, according to the chart here, hit targets. All right, first target already hit, but it could go to 35. All right, because, like I said, the results are not out yet. But by the time results come out, 35 is where I think we could do a short here. All right, it will pick here. UOB technically already hit first target. All right, it could hit the second one at 31. So 30, 31, 31, 50. That's where it is quite stretched. Okay, UOB, and what else do I have? Okay, so this is, I want to talk to you about, so just now, quite a lot of you asked me about, hey, you know, Robin, I catch no ball, your daily trade plan, your HSI daily trade plan. So for those of you who are, you know, listening in on, following the chat group, right? So every morning, I will issue a HSI trade plan, all right? And the HSI trade plan is strictly for day trading. You cannot bring it forward, all right? So some people are very fast, they are catching on. Wendy here? Wendy? Oh, Wendy is there, okay, Wendy. So every time we see the chat group, Wendy will say, you know, Robin, thank you, I make one lunch, I make one breakfast and all that, right? And the reason why she said that was because she followed the plan, right? She followed. So every morning, right, I will issue a plan and I will say the top and the bottom. That's it, easy, right? So each side today, if it's going to go to high, it's going to go to this high. If it's going to low, it's going to this low, all right? And when it comes to that level, you can say, okay, I want to put a short, but I always say, whatever you put at 80 points. 80 points cut loss, okay? 80 points. 80% of the time, it didn't hit the cut loss. You always profit. Okay, 80%. So far, the call is, the statistics, 80% success rate, all right? Without a cut loss, 80%. Okay, so I'm a professional in this because I used to run a service where people buy my trade plans for $200 a month, all right? So I keep them, you know, my trade plan every morning, they pay me $200 a month. I used to be running that service, right? But this time I do it free. Every morning, you know, no charge. I do it free. I do it up there. Okay, so how does it work? So first, in the morning, I said the high and the low. Second, all right, so get example, all right? Example, 14th of July, I say that the high, the support level is at 19,370, resistance at 19,570. So which means 19,570 you don't buy lah, 19,370 you buy lah. Okay, that's what it means lah. Okay, so so it started from here, and then it started coming down. Then miraculously, at 19,370 it stopped. and then it started moving up. Okay, and then we move up. Okay, it went to what? All right, it went to a high of 19,478. All right, so what we are saying here is that if you have like just buy on that levels on the DLC, you would have made 2%. Okay, if you have long on the support and sold at the resistance. Okay, so you don't have to wait for the level. When you make money, you can start selling on your own. You understand? All right, so you don't have to ask me when you're getting out. So I only give you a guide. All right, good chance to buy at a support. It's a good chance to make that money. All right, it's a good chance to sell if you sell the resistance. It's a good chance for them. Only that. Right, the rest of it, you take care of yourself. I cannot be there to text you every minute. Okay, so another one, trade plan here. Wait, so this 24th, right? So HSI predicted support level at 18,708 and 18,590. Predicted resistance level at 18,870. Okay, so remember these key levels, all right? 18,708, which is here. So I draw it, all right? So I draw it on the chart, just to get prepared. All right, and 590, all right, so that was 590, okay, and resisted at 18,700, so 18,700. So the market came down, all right, and from here, resistance level 18,870. So 18,870 was here. So the market went up, it broke the 18,870 all the way, you see that? It went to 18,780, 18,708 and rebounded a little bit, but it bottomed at 18,590. You see that? Exactly according to prediction. Okay, and if you have shorted here at 18,870, you would have profit almost 300 points. And on DLC, 300 points is a lot of money. Okay, you would have made like 3% return, 5% return. 3 and 5 add up together, the whole day will be 8% return. 8% return, and you don't have to cough out a single cent. Just close it. Use a DLC trade and close your trade and finish. Okay, but you need to be watching the levels. Okay, so yeah, so besides on the Telegram group, besides day trade plan, I also give trading ideas. Like for example, Sembcorp was going up, Sembcorp industry was going up a lot. I said short. And after I say short, the further came down. All right? And then, so fell from 555 to 510. So it's like about 45% gain. All right? And if you have traded the DLC, you would have made it some money, right? Okay, so no time already. Okay, so if you have not joined the DLC Telegram chat group, this is the one. Okay, you can, just go online and click on this and join the chat group. You can, if you want to trade through me, open an account and join the other chat group, which talk about everything under the sun. You can join this group. Okay, so if you are interested to attend courses, just register. So nowadays I don't conduct a lot of courses. Only when there's a lot of people at once, I conduct. So I don't conduct for a class of 10 or 15. I don't do that anymore. I am 24 hours on my algo. I am every day on the algo, almost 24 hours. Wake up in the morning, night, it's like every day looking at the algo, all right, and developing algos. So far, I've developed 3 algos, all right. So there's good news for everybody, but I haven't had time to talk about it. One day, I will call you guys up and I talk to you about algos, all right. My son was very happy yesterday. He woke up, the algo made him $300 US without doing anything, right. He was, so our family very excited about algos. Everybody is in the algos. Everybody is in the algos. Every morning ask, Dad, robot make money? The first thing he asked me is, robot make money? Last time my wife wake up in the morning, honey? Well, call me honey. Now? Robot make money? Okay, so one thing about robot is quite interesting, all right? They, you know, when a robot performs and you have the statistics of how it performs, it takes care of everything. It takes care of your risk management. So my robot is the only robot in the world that trades intraday indices, only indices. Okay, so I'll talk about that later. All right. Okay, so this is my contact. I know you guys contact. So now, okay, got time for Q&A? Huh? No. So okay, I tell you guys what. All right, post your Q&A on the chat group. All right, and then let Marcus take over. Okay, I think we got to leave now. If not, we're going to get in trouble. Okay, thank you for coming, everyone.